Welcome to the latest Motley Fool Scoreboard. I'm Anand Chokkavelu. We've got longtime fools, Matt Frankel and Toby Bordelon, giving a 1 to 10 rating to Moneyball Rec, Pure Storage, ticker symbol PSTG. With the strength of Pure Storage's business first, including factors like industry and competition. Also tell you what it does. A 10 is invincible, a 1 is hopeless. Toby's at a 7. Matt, you've got an 8.
Yeah, it's a really unique business. It's well positioned to thrive in the AI investment boom. It offers these storage as a service solutions that are generally superior to what the competition offers. It offers data center and on-premises flash memory storage solutions. They're really easy to scale up or down as the customer needs. Big competitive advantage other than the scalability compared to traditional hard drive solutions. Less power consumption. They're more reliable. 62% of the Fortune 500 are Pure Storage customers, which that deserves an 8, that sentence right there.
Yeah, I'm not quite as confident as Matt here. I went with 7. Look, you can't argue with the growth we've seen recently. 16% up in the last quarter, along with a guidance raise. They're targeting the high end of the market here for storage. The subscription offerings are very interesting, right? Building that recurring revenue model into what's essentially a hardware product, but you love to see that. I do worry about potential commoditization down the road. The space is competitive.
For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Toby's got a 7. Matt, once again, you've got an 8.
Yeah, I'm probably going to say this name wrong, but I did give it an 8. The CEO, Charles Giancarlo, is a former Cisco executive. He's been at the top spot at Pure Storage since 2017, and the stock has produced more than twice the S&P 500's total return in his tenure. The company's founder, it's worth mentioning, John Colgrove, he's still involved. He has a cool title, the Chief Visionary Officer, but he's still involved in the day-to-day operations of the business.
Yeah, I went with 7 here. Look, leadership is very experienced, as Matt notes. Management has steered this company through its transition to software, subscription, and cloud services. You cannot argue with the stock results we've seen. Kudos to this team. Like, you took a boring product, what is it, storage, and you turn it into something potentially much more lucrative. So I love to see that. They do consistently beat expectations in the earnings report, though. Now, if you're cynical, you say it's because they're sandbagging consistently, right? But hey, a beat's a beat. You got to love that.
For financials, a 10 is a fortress, a 1 is yikes. Consistent with the other ones. Toby's at a 7. Matt, you're at an 8.
Yeah, I gave it an 8. Double-digit revenue growth, 32% year-over-year net income growth in the latest quarter, a predictable recurring revenue model, 27% free cash flow margin is pretty stellar for a company at this stage. Operating margins have expanded pretty nicely in recent years. They have about $1.5 billion in cash on the balance sheet and very little debt, so good balance sheet. The international sales growth is something I would want to point out. That grew 26% year over year in the latest quarter and remains a massive opportunity. So, yeah, I gave it an 8 for financials.
Yeah, 7 for me again here, too. The revenue growth is very nice. That subscription model is gaining traction. Balance sheet looks great, right? No debt, plenty of cash. Cash flow is good. Now, stock-based comp, higher than I would like relative to the cash flow. That's why I give it a little bit of a knock here. But look, they are in fine financial shape. Nothing that stands out as phenomenal to me, but nothing to complain about that much.
All right, Toby, let's move on to valuation. How well will Pure Storage is stocked over the next 5 years, and how safe is it? 10's a sure thing, 1's a lottery ticket.
I went 10 to 15% here. Stock's done well in the past, as Matt noted earlier. But, you look at it, the really recent returns have not been as astronomical as some of the other mega hot data center stocks we're seeing right now. So it actually does look reasonable in comparison to some of the other stuff we see out there in the industry. Safety, I actually went with a 7 here. The business is stable and looks to be in good shape. There's a ton of competition here. There's always the risk of falling behind, but I don't see anything too concerning.
Yeah, I said the same 10 to 15% range, probably at the lower end of that range if I had to put a more accurate number on it. I gave it a 5 for safety, though. I mentioned I like the business. It's a great recurring revenue model, great traction, great customer base. My lower safety score is due to valuation. It trades for about 33 times forward earnings. Its price to sales multiple has more than doubled over the past 3 years. Rightfully so with the AI investment boom, but if that continues as expected, this could be a 15% plus performer. If it doesn't, an unexpected slowdown in the AI boom, it could be pretty bad news for this company. So that's why I gave it a 5 for safety.
Thank you to both Matt and to Toby. They've given Pure Storage a solid overall score of 7.2 out of 10. For a top it, Toby likes Western Digital. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is TechNip FMC. Till then, Fool on. know if it's Jason or Lou. Someone purposely tries at the end. You'll see them like right after the episode. They're like, all right,